Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. US investigators look into possible links between a suspected terrorist attack in New Orleans that killed at least 15 people and a Cybertruck explosion outside the Trump Hotel in Las Vegas. Asian stocks start the year on a sour note as weak Chinese economic data and the prospect of more US tariffs hurt sentiment. In Europe, ECB President Christine Lagarde says the bloc's 2% inflation target is in sight. Plus, after 50 years, Russian gas to Europe via Ukraine stops flowing, raising concerns about the continent's energy security. A very good morning. Welcome to 2025. We're heading towards that first trading session of the new year, and we've got futures painting an optimistic picture this morning. Euro Stoxx 50 futures higher 0.8%, pretty flat on the FTSE, but also looking higher for US futures as well. We had a downward end for Wall Street at the end of 2024, but it was the best two-year run since 1998. Let's see if that continues as we go into 2025. But flipping over to the cross-asset picture, we do have Japanese markets closed, so trade in cash treasuries is off until 7 a.m. UK time. But euro-dollar at a 103 handle. We had Christine Lagarde's New Year's message yesterday saying that the ECB's 2% target is in sight. Brent trading at $74 a barrel after that American Petroleum Institute report. Gold a touch higher, up 0.3%. And Bitcoin starting the year on the front foot after a bit of a drop at the end of 2024 as investors took profits off that big Bitcoin rally. Just flipping over, though, to the Asian picture. As I say, Japan closed, but the broader MSCI Asia Pacific Index is weaker this morning. We had those Caixin China manufacturing PMIs coming in weaker than expected, and that weakness weighing on Chinese stocks. The Hang Seng down about 2% as well, and the yen hovering at 157 per dollar. But let's get to our top story now. The FBI says it's investigating a suspected terrorist attack and hunting possible accomplices after a truck was deliberately driven into a crowd in New Orleans, killing 15 people at least. President Biden says police are looking into any possible link between that attack and an incident in Las Vegas, which involved a Tesla Cybertruck explosion outside President-elect Donald Trump's hotel.
We're tracking the explosion of a Cybertruck outside the Trump Hotel in Las Vegas. Law enforcement and the intelligence community are investigating this as well, including whether there's any possible connection with the attack in New Orleans. Thus far, there's nothing to report on that score at this time.
Well, let's get more now from Bloomberg's Bill Ferries. Bill, we've had a lot of conflicting information here on these two attacks, so just bring us the latest on the investigation.
Yeah, it's still in the early hours of the investigation into both these attacks. And as you heard President Biden saying there, it's not clear if there really is any connection between the two. The first one taking place in New Orleans, 15 people dead. The suspect was killed at the scene. He was driving a truck that investigators say had an ISIS flag and also other explosive devices inside of it. Investigators also saying that there were potential explosive devices found along that route on Bourbon Street in the French Quarter. They're looking into that to determine whether they were linked to this attack or whether they're explosives at all. Right now, investigators saying that they do not believe or they believe it's possible that the driver in New Orleans had accomplices. That's the lead they're pursuing with the highest urgency right now. They have taken their investigation on from New Orleans to Houston as well, looking at people the driver may have known there, contacts, friends, family, things like that. They're also scouring his social media feed to see if there's any more clues they can uncover about what happened just a couple hours after midnight in New Orleans.
Yeah, as the Louisiana governor put it, a really horrific act of violence, this bill. But what does it say about security concerns in the US, the New Orleans attack in particular?
Yeah, I think there's going to be a renewed look at security in cities. I mean, certainly New Orleans, the French Quarter, has always been a gathering place for very large crowds. There's going to be a lot of questions about why it wasn't secured more defensively, why a truck apparently was able to drive around a police barrier and get onto that road to drive into the crowd. And also just coming ahead of the inauguration in Washington, I think there's going to be a lot of people looking at security procedures for that. But back in New Orleans, the city had been scheduled to host a major college football game on Wednesday night and a parade. That was all postponed till Thursday. I think we'll get a first look at the enhanced security when those events unfold later in the day in the United States.
Yeah, I have many happy memories in the French Quarter. Our thoughts with the families there. Bill Ferries, we thank you for the update. Now, back to markets. Chinese stocks are lower on the first day of trading of the new year as weak economic data and the prospect of more US tariffs hurt sentiment. Joining me now is Mark Cranfield from our MLive team. Mark, just take us through how the first day of trading is kicking off in Asia.
Badly, in short. Not a happy start at all, particularly for the Greater China region. Hong Kong is also having a pretty rough start to the year as well. A little surprising in some respects when all the effort the Chinese authorities were making towards the end of last year to remind investors about all the stimulus they're doing and all the positive aspects in terms of trying to promote growth in 2025. And yet here we are with little sign that they're doing anything today. And even a speech from President Xi Jinping at the end of last year doesn't seem to have rallied the market at all. But once again, the data is not encouraging. We had some PMI from the Caixin numbers today. They were well below expectations. And also there's a story going around that the PBOC, they've been injecting plenty of liquidity into the money markets over the past few weeks. And some people in China are suggesting that that will mean a delay to interest rate cuts this year. Now, that's obviously not something which investors were looking for. They were hoping that the PBOC would step up pretty quickly, that there would at least be a reserve ratio cut in the early part of January. Maybe even the loan prime rate will be brought down as well. It looks as though those things are being postponed, and investors don't like the sound of that. Particularly when January is going to be a tough month in the Chinese region. We've got not just the inauguration of Donald Trump coming up in a couple of weeks' time. The Lunar New Year period comes earlier than usual as well. That also falls in January. So if investors are looking for reasons to stay on the sidelines, there are plenty building up. And that's certainly what it looks like so far, with a very negative start for Hong Kong and China today.
Yeah, interesting to juxtapose that with the optimism of President Xi's New Year's message. And of course, we also had a New Year's message from ECB President Christine Lagarde saying that the 2% inflation target is in sight.
So we have a big, heavy agenda at the ECB. We have made significant progress in 24 in bringing down inflation, and hopefully 25 is the year when we are on target as expected and as planned in our strategy. Of course, we will continue our efforts to ensure that that inflation stabilizes sustainably at that 2% medium-term target.
So that video posted on X yesterday. Mark, is it realistic? Will the ECB hit its target this year?
It's good to see that they are confident that they can achieve it, and yet there is so much outside of their control. What traders will be looking for is the factors that will move them away from potentially achieving that, or at least for staying. As Christine Lagarde said there, they hope to stay around the 2% level, but that looks somewhat unrealistic, really, if you think that so much of it is outside their control. For one, the level of the euro currency is really a function of what happens with the US dollar as well. And if you look at the US dollar, it's so strong, and it's pushing around all other currencies around the world, especially the euro, which may well go below parity against the US dollar. And that would obviously impact on the inflation outlook in the Eurozone. So if we continue to see a decline in the euro, that will also be a problem for the ECB, because they would then maybe be reluctant to lower interest rates as quickly as the market is expecting. Currently, we have traders pricing something like 5 interest rate cuts in a row coming from the European Central Bank, on top of the cuts we saw last year as well. Now, if you get in a situation where inflation starts to be a little bit sticky, it's going to be very tough for the ECB to follow through from that point of view. So that's something which they can't do too much about. And then, of course, you've got the whole question of tariffs as well. Whether or not, if And when the tariffs do hit, they won't just be for China, they could well be directed against Europe as well. That could also be inflationary. So for Christine Lagarde to actually achieve it on a sustainable basis, traders will probably be taking that with a big grain of salt, and they won't be holding their breath for the outcome.
Yeah, markets pricing in 5 cuts at the 8 ECB meetings this year, indeed. And I also mentioned, Mark, about the performance of US stocks over the past 2 years, the best run since 1998. But what are you expecting as we look ahead to this year?
I think at the beginning of the year, traders are not really going to go against what they were doing last year. They see the incoming US president as being positive for the US economy and therefore for the US equity market as well. There's an expectation that taxes will be lowered again, and that's obviously going to be good for people to go out and spend. It also will help corporate profits as well. So certainly the initial feeling is that whatever we saw towards the end of last year will carry through at least into the early part of this year. The problem for the US equities is at some point they're already looking expensive relative to the rest of the world. They could well reach a point sometime this year when they're just so expensive relative to Europe, relative to Asia, other parts of the world, that investors say, well, it's time to cash in and get out of the US and deploy money into more undervalued markets. That isn't happening just yet, but it is certainly something which big investors are looking for at some stage this year, where the American exceptionalism story starts to unwind. When it does, we will then see US equities start to reverse course. But certainly for the first part of the year, that probably isn't going to happen.
All right. Thanks, Mark Cranfield from our M Live team. Happy New Year to you. And later this hour, we're going to take a deeper dive into what Wall Street expects in 2025, as it is the subject of today's big take. But coming up this Thursday, in terms of eco data, at 7 a.m. London time, we get the latest reading on UK house prices, my favourite subject. That's from Nationwide. They're expected to edge up year on year in December because you could have, of course, seen quite a solid uptick from the aftermath of Chancellor Rachel Reeves's budget. That uncertainty swept away, as well as the Bank of England's second rate cut in November. Then at 8 a.m. 8:30 a.m. London time, we get the latest Riksbank minutes. It cut rates, of course, at its last meet of 2024. This is interesting, I would flag, because despite the signal that there's only one more cut coming in the first half of this year, our economists reckon that there'll be 2 because of how weak demand is. And then at 1:30 p.m. UK time, of course, we get the latest US jobless claims numbers, expected to tick up, but still suggesting relatively low layoffs, even as the labour market cools. And you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak. Today, they're leading on the 2 attacks in the US, in New Orleans and Las Vegas, a potential link being probed between the 2. They also look at oil rising on this American Petroleum Institute report of a drop in US inventories. And they have Christine Lagarde talking about that 2% inflation target being in sight. So do check that out on your terminal. Just go to DAYB Go. But coming up, no more Russian gas will flow to Europe via Ukraine after both sides allowed a transit deal to expire. We'll bring you all the details and what it means for the continent next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Russian gas has stopped flowing to Europe via Ukraine, closing off a route that's operated for 5 decades. The stoppage will slash Russia's revenue by about $6 billion a year and force Central European countries to source more expensive gas from elsewhere. Bloomberg's Priscilla Azevedo-Roca joins me now. She is following this story on New Year's Day for us. Priscilla, this is historic, but I mean, how much of Europe's gas needs actually depend on this route?
Right. So good morning, Lizzie. So basically 5% of all the region's gas needs depend on this route at the moment. But the thing is, this route has been, as you said, is a historical route. It has supplied more to Europe in the past. And right now, timing is really, really bad. The region's balance of supplies are very tight, which means that any loss of supplies will have an impact on the broader market. And by broader market, I mean Europe as a whole, because prices are interconnected. We're also at a time when the weather is turning cold. Europe has benefited from 2 very mild winters that has helped the continent weather the loss of supplies during the energy crisis. And at the same time, the region's storage facilities are depleting at the fastest pace since 2021, which means that energy consumption is going up. When the weather turns colder, we see more use of this, and the stockpiles have seen as a buffer for these periods of cold weather in the past. For now, this might not be an immediate problem for this winter. We will survive, but it will become a problem for traders once they start stockpiling for next season. Because there's less gas available in the system, they're going to have to look elsewhere, which means higher prices for longer.
Yeah, I mean, I think about the countries that have relied on the flows. Slovakia, of course, really pushing hard to get a deal here. What are they going to do to get gas, and how much is the diversion actually going to push up prices?
Right. So those countries, they're going to have to look at alternatives elsewhere, and any alternatives are going to cost them more because they're landlocked. They're not interconnected by pipelines, and pipelines gas from Russia has usually been cheaper. So they're going to have to buy LNG, liquefied natural gas, through Germany or through other ports or through access to countries. They're going to have to rely on imports of other types of energy and so on, which will mean higher prices.
And what does it mean for Russia's gas revenues? Because, of course, this has been oiling the wheels of the Kremlin's war machine. What's Putin likely to do next?
Right. As you've said, for Russia, it's a financial loss. You said it's about $6 billion a year, according to our calculations, at current prices. But Gazprom has been looking at other routes since the start of the war, right? Gazprom is looking into China, but it has increased exports into China. And Putin has also increased exports of liquefied natural gas from Russia. And we see that gas getting to Europe these days. So it's kind of a tricky situation there because it's a loss of a historical route. It has a big symbolism because this route, as you said, started 50 years ago in the middle of the Cold War. So during the darkest days 50 years ago, gas was still flowing.
All right, really a historic moment. Priscilla, we thank you for covering it for us. Bloomberg's Priscilla Azevedo-Roca, good to see you. Let's check in on oil. We are looking at Brent and WTI currently higher about 0.2% in this first session of 2025. This is after a report from the American Petroleum Institute showed that US crude stockpiles continued to shrink last week. It would be the 6th straight draw if confirmed by government data later today. But really, you've seen oil stuck in this narrow range ever since mid-October. Brent posting a modest annual decline, WTI ending the year pretty much where it started. But you've got investors bracing for a glut this year, and that is going to make it harder for OPEC Plus to revive production. Plus, you've got all of the uncertainty around Donald Trump's presidency and the tensions in the Middle East and China's economic recovery. So it's something, of course, we will continue to track for you throughout the year. But in other news this morning, Citigroup and Bank of America are to leave a global climate banking group, the latest lenders to exit the net zero banking alliance. The bank's departure comes with Wall Street under pressure from Republican lawmakers to distance themselves from industry groups that support reducing carbon emissions. The RZBA is part of the Glasgow Financial Alliance for Net Zero, which is co-chaired by Mark Carney, who is, of course, chair of Bloomberg Inc., and Michael Bloomberg, founder of Bloomberg LP, parent company of Bloomberg News. Now, I did mention that we have to factor into the oil price, of course, China's economic recovery. And we got those PMI numbers from Caixin earlier this morning, that weakness factoring into Chinese stocks as well. You can see the CSI 300 down 0.3%. And indeed, this supplements the data we got, the official numbers earlier in the week. We actually saw some strength for services. We are in on the growth side of 50, but it is weaker than expected, this number on your manufacturing. Of course, we factor in the tariff story, the uncertainty around that, but also the question of what stimulus we can expect from Beijing into the Chinese economy in 2025. But speaking of the president-elect, coming up on the programme, his return to the White House is dominating this year's Wall Street predictions. You can't read one that doesn't mention him. From wildly expensive US assets to the lurking threat of bond vigilantes, we're going to discuss next what the finance world's expecting in 2025. So do stay with us. This is Bloomberg.
I'm looking at 2025 being the year of the great pivot. And by that I mean I think China is likely to outperform the US.
Uncertainties abound. And I would say it is, I think, very important for China to tap the policy space more ambitious, more aggressively and effectively.
I'm a little bit concerned as to the durability of the Chinese consumer amidst some of these a weakening external outlook as well.
What I'm looking for is a sudden jolt or one other sudden announcement with the emphasis on money in the pockets. That will really cheer me up.
The next 12 to 18 months in China for investors based in the US could be a bumpy ride, but for investors who have 3 and 5 year and longer time horizons, then you have valuation on their side.
Some of our guests giving us their outlook for China this year. We have seen the CSI 300 as lower by as much as 3% this morning, but paring some of those losses ever since. But staying in China, the world's largest emitter of CO2, of course, might have reached peak emissions. If so, the world could be in a better position to slow global warming. But there's a catch.
China accounts for more than 30% of carbon emissions globally. This may not surprise you. What might is how long it's taken for that to become the case.
If you look at a country like the UK, which began its industrial revolution in the late 1700s, or the US, where it began in the late 1800s, it took decades, maybe even centuries, for the country's emissions profiles to sort of slowly rise and then hit a peak and then slowly fall. China has done that all in fast forward. Its industrial revolution really only began in the 1980s after Deng Xiaoping's economic reforms, and it's seen a huge, massive increase in emissions since then.
This line, which tracks China's emissions over the past couple of decades, speaks for itself, and loudly in comparison with these other big polluters. Powering some of that rise is this stuff, and lots of it.
China's power system is very heavily reliant on coal power, and that is the largest contributor in terms of China's domestic emissions.
China mines and burns half of the world's coal in order to power its economy.
An economy of 1.4 billion people, no less, and rooted in heavy industry. Literally producing the building blocks for factories the rest of the world has grown to depend upon.
Anytime a country imports something from China, it's in essence exporting its own pollution to China that it would have emitted at home otherwise.
And you can watch that whole film on the terminal or on YouTube. Just staying in China and taking a look at how stocks are performing in this first session of 2025. It's a pretty bruising start to the year, their worst start to a year, in fact, in nearly a decade because of the economic uncertainties and the weaker than expected manufacturing data that we got in this private survey from Caixin on the growth side of 50, but below estimates. So there, the CSI 300 paring some of its losses. But coming up on the programme, President Biden says authorities are investigating the 2 attacks in the US. We'll get into that next. A very good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. US investigators look into possible links between an attack in New Orleans that killed at least 15 people and the Cybertruck explosion outside the Trump Hotel in Las Vegas. Asian stocks start the year on a sour note as weak Chinese economic data and the prospect of more US tariffs hurt sentiment. In Europe, ECB President Christine Lagarde says the bloc's 2% inflation target is in sight. Plus, after 50 years, Russian gas to Europe via Ukraine stops flowing after a transit deal expired, raising concerns about the continent's energy security. Well, a very good morning. Welcome to the new year. Welcome to 2025. And checking in on these markets, futures pointing a positive picture as we head towards the first trading session of the year. The FTSE pretty flat, however, but Wall Street saw a down close at the end of 2024, but it was still the best two-year run since 1998. If we flip over to the cross-asset picture, Japan is closed, so cash trading in treasuries is off until 7 a.m. London time. But we have euro dollar there at a 103 handle. We had Christine Lagarde, as I say, in her New Year's message yesterday saying that the 2% target for the ECB is in sight. Oil edging higher at $74 a barrel now. After that, US industry report signalled crude stockpiles in the US have continued to shrink. We await confirmation of that from the official government data. Gold pretty steady there, up 0.4% as traders mull that US rate path. And Bitcoin starting the year on the front foot as well after slipping at the end of 2024 as investors cashed in on that record rally. Flipping over to Asia markets, we have Chinese stocks on track for the worst start to the year since 2016. The CSI 300 down 3% earlier in the session, but paring some of those losses now. The MSCI Asia Pacific Index still also down 0.6%. And we have the yen there hovering just shy of 157 per dollar. But let's get back to our top story this morning now. The FBI says that it's investigating a possible terrorist attack after a truck was deliberately driven into a crowd in New Orleans, killing at least 15 people. President Biden says that authorities are looking into any possible link between that attack and an incident in the Las Vegas area, which involved a Tesla Cybertruck explosion outside President-elect Donald Trump's hotel. We can get more now from Bloomberg's Bill Ferries. Bill, good morning to you again. We had the Louisiana governor saying that the New Orleans attack was a terrorist attack. What do we know?
Well, we're still in the early hours of this investigation in both New Orleans and Las Vegas. In New Orleans, federal officials and local police are saying that the suspected driver of this truck was killed at the scene, that he had inside his vehicle a couple additional explosive devices, as well as a flag that showed support for Islamic State terrorist group. They also say that there may have been some potential explosive devices planted in the area around that French Quarter of New Orleans that's so popular really year-round, but particularly on New Year's Eve. They are also taking their investigation to Houston. They're asking the public for any potential leads. They're looking at the suspected driver's social media accounts, and as well as talking to people. They say that he may not have acted alone in this. That seems to be the assumption right now, although there's no concrete evidence coming out so far publicly that there was additional attackers involved in this.
Well, yeah, you mentioned social media, Bill. If we can just comb through some of the conflicting lines here. We've had Elon Musk posting on X that both attacks used trucks rented from Turo, but Turo questioning that, saying it's cooperating with authorities. Has there been any actual evidence that the incidents were related?
Not really. I mean, beyond the timing, both taking place in the early hours generally of New Year's Day. It's not clear. It's really, at least publicly, we haven't seen any evidence linking them. In the second case, a driver was also believed to be killed in the Cybertruck. People noticed smoke coming out of the truck before it exploded. A video of the explosion shows a lot of fireworks going off in that area. We just don't have quite as much information about the investigation and what happened there as we do with New Orleans, which happened several hours earlier.
And of course, there'll be fears now of another attack. So what's been the message from the White House?
Well, the message from the White House has been that both investigators are in these two cities are getting a lot of additional federal aid. New Orleans, of course, was supposed to be hosting a major college football game and parade on Wednesday. That has since been postponed till Thursday. I imagine we're going to see quite a stepped-up security presence, including federal help in that. And then I think that there's just natural questions being asked about security in places where there's big public crowds gathered, and that will extend to the inauguration of Donald Trump in Washington on January 20th. I think there's going to be a relook at the procedures surrounding that event as well.
All right, Bloomberg senior editor Bill Ferries, we thank you for the update. And speaking of the president-elect, let's get to some of our other top stories this morning. Donald Trump says that he will lobby House Republicans, if necessary, to help elect Mike Johnson as Speaker. Donald Trump endorsed Johnson on Monday ahead of a House vote on Friday. Johnson facing criticism within the party after backing a temporary spending deal that left out some of Trump's demands. In other news, Nippon Steel has offered to give the US government a veto over any reduction in US Steel's production capacity in a last-ditch effort to win approval for its takeover. The proposal is aimed at addressing concerns that the Japanese takeover would lead to a decline in American steel output. Shares of US Steel surged after the report, but President Biden is still expected to block the deal. Now, to Wall Street, where expectations for the year ahead are normally defined by economic statistics like growth numbers and inflation figures and a host of other, let's be honest, dull but worthy indicators. But for 2025, the outlooks are dominated by a single person who is anything but dull, and that, of course, is Donald Trump and his impending return to the White House hanging over almost every word of the key calls from financial institutions for 2025. Fortunately, our team here at Bloomberg's combed through them for us, and our Bloomberg senior editor, Tim Craighead, joins us now for analysis. Sam, our senior editor, Sam Potter. Sam, Trump is looming large over these forecasts. What exactly is Wall Street saying about his impact on financial markets?
Yes, good morning, Lizzie. I think Wall Street is nervous, put it that way. Both because he's obviously been making a lot of loud noises about potential tariffs, for instance. We know that he is sometimes a bit bombastic in his approach to politics, so we don't know exactly what we're going to get when he is in office. You know, even when he is in office, he's expected to be quite unpredictable, and that has kind of added a layer of uncertainty over all the calls for the year ahead in a way that perhaps we haven't had in more recent years. So, yeah, pretty much every call from economics to markets is all caveated with the great unknown that is Donald Trump's second presidency.
I mean, actually, there's a lot of consensus across these over 700 key calls. What else, if anything, stands out to you from this collection of outlooks?
Yeah, so I've been doing this for a few years now, and every year there is a general consensus that emerges, but I would say that this year is definitely stronger than in previous years. The overall picture is of the US exceptionalism once again coming to the fore, both in terms of economics and in terms of asset performance. There just doesn't seem to be any perception that the rest of the world can keep up, let alone catch up with the US picture at the moment, particularly with Trump coming in. Although we don't know exactly what he will do, the anticipation is definitely that he will be pro-business, light on regulation, and that this could add a shot in the arm to US activity. There's also a consensus that inflation is, while it's under control, it's going to be extremely difficult to get it down to target. So rates, especially in the US, may end up higher for longer than we expect, or not falling as far as perhaps the market is pricing right now. And yeah, general picture that the rest of the world may face its difficulties, particularly if Trump brings in tariffs.
So a possible Trump boom. What about our region? Are we going to get a European revival?
The confidence of that is not high, let me just say. Europe is seen as having a number of issues. In particular, we have political problems at the heart of Europe, where France is struggling to keep a government. Germany is about to go to elections. There is not great optimism about a big growth revival. As mentioned, tariffs could be targeted at Europe, which is just going to add another headwind. But also, I suppose the one hope is the ECB is seen as cutting rates further and faster, perhaps, than other regions, which may help kind of cushion or reduce some of these difficulties. But no, optimism for Europe, sadly, once again, is not particularly high.
Yeah, and we keep an eye on euro-dollar parity with that in mind. Bloomberg's Sam Potter, we thank you for the look ahead. And we'll have a live Q&A at 5:15 p.m. London time with Bloomberg Markets if you have any questions for the team on their stock market predictions for the year ahead. But as we continue to think about what's coming up in 2025, we have global stocks having registered a second consecutive year of gains in 2024. And Bloomberg Intelligence has compiled a list of 50 companies to watch this year, with AI and exposure to China among some of the common themes. Now we can speak to Tim Craighead, Director of Equity Research here at Bloomberg Intelligence. Tim, good morning to you. I'm so excited to talk to you about this. Obviously, a big theme of 2024 was AI. Now you're talking about China exposure, but I was kind of struck that that's a positive in your view because of the stimulus rather than because of the threat of Donald Trump's tariffs.
Yeah, and indeed it is. This is an annual project we do where we boil 50 companies together based off of a broader list of focus ideas that you can find on the terminal. And China last year was a big deal, but it was mostly negative because of the property crisis. This year, with China's stimulus, and there's still questions about it, but as that comes through, we see more of an opportunity from a positive standpoint than a negative or a risk. Specifically, China wealth is still flowing, and you've got companies like HSBC that is very focused on wealth management as a key driver, along with other things that the new CEO is implementing as an opportunity. There's also, we think, plays on metals and mining as an infrastructure story. So Vale, and there's a Chinese aluminum company that's on the list. Remy Cointreau has a China component to it. It's not driven by China, but China consumption will end up being a positive. So there's several things that can play through from a China-related perspective.
And I mentioned AI. It's not going away, but do you think that it'll be less of a US-focused play this year?
That's interesting. AI was a big deal last year. It is this year. Our focus this year is more on some of the enabling technologies as opposed to the big LLMs, which were a big focus last year. A lot of it is U.S. oriented. So you've got Micron Technology, which is about high bandwidth memory. You've got KLA, which is a test and measurement software company. But there is a European story, and it's one that a lot of people probably don't know. VAT Group. They make valves. You think, what? Valves are critical to create vacuums within the semiconductor manufacturing process. And this is a very levered play into this.
What, to cool everything down?
Yeah, well, it's to keep it clean.
OK. I also just want to ask you, because this is what really interests me about this list when you compile it, what are your biggest left field ideas in the 50 this year?
Yeah, that's an interesting question as I think through this. One that jumps out, and it is a household name, or we all wish it was a household name.
Surprise us.
It is Porsche.
Oh.
You look at the stock price, along with some of the other big auto manufacturers, it's tanked. We think that's an interesting story in 2025. There's several new cars that they're bringing forward. Some they've already announced, some that are going to ramp up, like the hybrid 911. And we think that there's a really interesting new product-driven story here to come through.
OK, let's see if more people have their midlife crisis in 2025. Tim Craighead, Bloomberg Intelligence Director of Research, we thank you for bringing us those 50 companies to watch. Coming up on the programme, BYD sets a new monthly sales record as it vies with Tesla for top global EV sales in 2024. We're going to dive into the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. We were just discussing Porsche. Let's stay with cars. Chinese EV giant BYD has hit a new monthly sales record in December, spurred on by subsidies and extra incentives to buyers. Let's get more now from our Bloomberg Asia transport reporter, Linda Liu, who joins us from Hong Kong. Good morning, Linda. We're looking at BYD's record sales numbers, but I wonder what that signals for the China EV market more broadly in 2025.
Yes, BYD saw a really spectacular December where it notched more than 510,000 deliveries of EVs and plug-in hybrids. That actually brought their full-year sales figure to 4.27 million cars. So it's a really good performance, but BYD's dominance of China's electric vehicle market also means there's not much space for other companies to really try to eke out market share. Some of the smaller players are struggling and not meeting their annual targets, and you've got companies that are even facing financial difficulties. So we're expecting the competition to remain really fierce into 2025.
But by contrast, Tesla might not reach its delivery guidance this year. So I wonder why that is and what it means for global EV demand.
Yes, we're seeing some of the analysts' estimates putting Tesla's fourth quarter deliveries at a record high, but we're not sure if it's going to take it to the 1.8 million or so EVs that Tesla needs to sell this year to maintain a slight growth, as Elon Musk has tried to kind of forecast earlier in the year. Tesla's experience is not alone. They're not alone. You've got other car makers like Volkswagen and Mercedes that are also facing weak demand for EVs, and they've had to walk back some of their EV sales goal for the near future. This is coming after major European countries such as France and Germany scaling back or ending their EV subsidies this year. So that's taken a hit to demand. Looking ahead to 2025, Tesla is probably hoping with the Fed cutting interest rate, it can spur demand again with lower costs and maintaining auto loans, as well as new product cycles with Tesla trying to get its robo-taxis to the market.
So, Linda, the big question, could BYD beat Tesla this year and be the world's pure EV champion?
Yeah, that's a really good question. We're all really watching to see how BYD performs domestically as well as globally. We all know that Chinese EVs is facing a lot of trade actions from key markets such as the US and the EU. And so with momentum possibly slowing down for Chinese EV exports, it could affect how BYD's numbers will do overall in 2025. And looking at Tesla, if they can get some new products at a more affordable pricing this year, that could possibly lift their sales. And so we're really trying to see which of these two, BYD or Tesla, will get that sales crown for the best-selling EV brand for 2025.
All right, so race will continue to monitor this 2025. Bloomberg Asia transport reporter Linda Liu, we thank you for the update. I just want to stay on China and check in on markets this morning because Chinese stocks are having their worst start to a year in nearly a decade this morning. The CSI 300 down 3.16% as things stand. The Hang Seng down 2.25%. We've got investors citing the economic uncertainties surrounding Donald Trump and China's stimulus. We also had that weaker than expected manufacturing data out this morning, the Caixin PMI number. So we obviously need to factor in volumes here. Trading volume high in Hong Kong, low though in Shanghai and Shenzhen. It suggests that traders are waiting for more catalysts to become clear before they get in on the moves. But if we think about how this is going to translate into the European session, we have Euro Stoxx 50 futures still pointing higher by 0.6%. FTSE 100 futures flat to the downside because of that China exposure. But broadly, it looks like the Chinese pessimism isn't going to filter in too heavily into the European session or indeed into Wall Street. We've got S&P E-mini futures higher 0.5% as things stand. Also interesting to note the PBOC boosting support for the yuan after the currency's year-end tumble. They've set a stronger than expected daily reference rate to stop it weakening further because, of course, the offshore yuan had fallen to its weakest level since 2022. But the central bank's intervention helped it appreciate. And when we think about 2025, you've got Wall Street banks forecasting a continued decline in the yuan to 7.5 per dollar in 2025. So we'll keep across that for you and the impact into the European session. But we've got plenty more coming up for you on Bloomberg Daybreak Europe, so do stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. In our last few minutes here, let's just go through a couple of term charts to set you up for your day. We were discussing with Priscilla Azevedo-Roca the end of the flow of Russian gas through Ukraine, and you can see here how that's fed into the pricing. Futures spiking in the near term across the months, but the price of the first month contract the highest since October 2023. And if we flip the board in terms of what it means for Russia, Ukraine accounts for nearly half of Russia's gas supplies to Europe. So if you take away the green here, the green being Ukraine, that only leaves Turkstream as a source, hence that price rise in the first chart. But let's flip over again, because you need to factor all this in when you're thinking about the outlook for inflation in Europe. And we heard from Christine Lagarde in her New Year's message saying that ECB 2% target is in sight. You can see here markets have priced in 5 more ECB cuts in the 8 meetings through 2025. And if we flip the board, if we look at the outlook for global economies, you can see that actually the US is likely to have the best growth, but Europe really a lot of weakness, and that's hence the cuts. The opening trades up next. Guyana and Chrissy will be with you for the open, so do stay with us. This is Bloomberg.